All right, Kevin, this is for Wednesday, the 27th. I'm recording this a little earlier than normal. I've got about a half hour to kill here before the S&Ps close. So any S&P commentary I make will be before the close. I'm going to take a quick look right now just to see, bear with me here, what that market is doing. It was up on the day. We were testing that resistance area, and now we're no longer. It's actually up slightly on the day. We got it back up into that resistance area in the 28.30s, 28.29.5. I'll talk about that in a moment. But I don't see us closing above that here with about a half hour to go before the close. So I'm going to jump right into, well, here's wheat. And let me back out of this just a little bit and take a look at this channel formation. We've got a soft one at 67 and a quarter. That's intraday containment. And 61 and a quarter is a session containment level. And holding above that, we could test this tomorrow if we break 67 and a quarter. 61 and a quarter able to contain session weakness, and above which this 483 and 3/4 speed line is expected over the next 2 to 3 days. Now, we did spike higher. We did break back in the afternoon, but we still closed up on the day, which, it means that we can take another stab at this tomorrow. Low 480s. This is a trend line across these tops. That's an intraday containment level. So maybe we could talk. I don't know if it's premature or not. Getting a little itchy to get out of this call, but there's no sell signal, so there's no reason technically to do it just yet. And here's the other thing that we need to discuss. Do we ride this thing all the way back down to 450 half, which I now show as a kind of a multi-session, even a weekly containment level? Um, there's a case to be made that if we settle below 67 and a quarter tomorrow, we could bail. If you eliminate this intermediate channel structure, that would be closing below yesterday's low, which is the move high. Below 67 and a quarter, this market could break back to here. Although I do need to give some degree of respect for this channel formation of 61 and a quarter. So this is a bit of head scratching here. I'm fine with dumping it following a break or settlement tomorrow below 67 and a quarter, and just reevaluating this entire market. Right now, there's not much to reevaluate, actually. You've got primary overhead resistance in the low $5 area, and we still have long-term support at that 431 even long-term weekly channel bottom. So we can talk about this tomorrow. So I've addressed our position. Let me jump into, well, you can take a look at this live cattle spread. Um, Here is that we did settle below it. I did see we got spooked out of this, which is fine. At the time, this market could have ran up into this area today. I mean, with this volatility and this spread, I think we did the right thing. But overall, this is a market to remain short in below 332 half or 3.325. Still anticipating this lower area over the next 3 to 5 weeks. And so there's that. Do we get back into the short side? I'm open to it if you are. Otherwise, we could let this thing play out if you like. Um, Lean hogs, I'm just going to once again clarify 92.20 base support. If you look on page 2 of your newsletter, you'll see that that is a long-term support area. We remain bullish above it, and there's not a whole lot to do uh, until we settle below it. Let's just take a look at the newsletter, I suppose. Lean hogs, open this up, and I'm going to move the newsletter over to this page. Boom. And there we have it. I'm going to open this up a little bit. So 92.20 is this formation here once again. That's our base of support. Otherwise, the market is quieted. You can see we're kind of consolidating the last few days below this resistance area and above 92.20. So not a whole lot to do right now. But if we get down to 92.20, we could consider buying calls. They'd be cheaper, obviously, than they are now. So there's that. Let's talk about feeder cattle. Yeah, the newsletter itself actually is adequately charted. So we've got a 50% retracement now at 148.57, which lines up perfectly with this long-term speed line coming off the 2014 high. That's our base of support. This is still a market to buy into, up, down, all the way down to 148.57. If we close the week below 148.57, then all bets are off. 138.60 then expected within, which is this trend line here, within 3 to 5 weeks, and quite possibly the 126 handle within several months. This on the heels of a significant failed long-term buy signal by closing the week back below 148.57. Until then, buy pullbacks. Closing today above 151.17 should indicate a good weekly low. This 155.35 high then that we topped out at a few days ago, then expected within several days, and 158.47 perhaps within several weeks. In fact, 158.47 is expected over the next several weeks, so long as we continue holding above 148.57. And big picture still likely to yield 163.50, say by the end of May, and possibly the lower 180s into later years. So that's all in effect above 148.57. And so I'm going to close that sucker. Let's go on to June live cattle. I'm just going to show the support area, which I'm showing now. It is a target now that we're selling off 117.30 to 118.45. This is the area that is likely over the next, say, 3 to 5 days below 121.22. We close at 120.72. So this 117.30 to 118.45 area can absorb selling into June expiration. And once we test it, the market then prone to rally back into the 123, 124 handle and even higher as we continue into later April and into May trade. And that's all I'm going to say for that right now. So buying 117.30 to 118.45 is the way to go with regard to the June live cattle. Our next buy signal in cattle will come with an August settlement above 120.60, which you can see illustrated here. That's that channel top we pushed through a few days ago, did not settle above it, contrary to what happened in the June contract where we actually did settle above that formation. 120.60, our next upward pivot point through April, and if we can close above it in the coming week or two, then 127 handle expected within 3 to 5 weeks. Until then, we remain heavy, and in fact holding below 118.22, secondarily so, into later week. This 114.30 to 115.67 region now expected, say, by the end of next week or sooner. I should illustrate that, but it's identical to what you just saw in the June contract. A combination ascending channel bottom and 1/3 speed line projected off this April low all comes in here. Do I have that on the weekly chart as well? No. But the weekly chart, the long-term speed line coming off of here is in the 114 handle. You've got a channel top in the 114 handle. So there's a lot going on here. Oh, I'm sorry. That's the August contract. Never mind. The daily chart itself on this particular contract shows a lot of support in the 114.30 to 115.67 area, and that is our next stick our neck out buy zone for August live cattle, for the cattle market in general as well. Let's take a look at ethanol, RBOB, crude oil. Crude oil rally today. We are not far from testing that. Let me pull up the newsletter itself. We're not far from testing this long-term resistance area at 61.67 to 62.15. So this shows 59.04. We're actually above that now. We're at 59.94. So just once again, if we get up into this area, I can easily not see this, but if we do, I see it, as it happens. I could easily not be present, but if you see us pushing into the upper 61 handle here any day this week or next week, that's really our signal to look at put acquisition, in my opinion. If we close the week then above 62.15, then we bail out of those puts. But until then, this is a good short sale zone, as I've been saying. But we're not there yet. Crude, corn, once again, 384 and change. I don't know if we'll get there today. We just might. The market did back off a little bit today. 384 and 3/4, our primary resistance. As I've been saying, we could set a short in that zone, have no problem with it, think we should actually, because once we test it, the market then could break about 20 cents back into the mid 360s within 2 to 3 weeks. Downside today, 375 half can contain session weakness, and above which the market can continue to approach mid 380s resistance. We've been in the low 380s so far this week. If we close today below 75 half, Markets indicated a good weekly high, 366 even, then considered a 3 to 5 day downside target. But bottom line here, 384 and 3/4, nice short sale zone. I'm going to skip D's corn, move on to soy. Let's talk about soy. Here we go. I'm not supposed to open it that way. And it gets all complicated here with, hard to explain, but I've got these macros, and you have to open these files by right-clicking and going open. It's a finicky process. But we'll take a look at beans here. We're testing this, and obviously in hindsight, glad we bailed out of that long position. Right now we are failing, and if we close today below 900 even, then expect follow-through selling into the 879.25 region, say by the end of next week, where we should place a weekly low. I can be convinced to buy into this, but I know this is not a big picture area. It's just a weekly containment one. But once we test it, the market could rotate up into later April. Inversely, if we close today above 910.5, which is the high settlement price about 3-4 days ago, that should yield 927.25 within 3 to 5 days or so, where we can top out through next week. And there's also the area to settle above for yielding longer term resistance at 940.75, which you can see here. I've got it 940.5 on the weekly chart. So this is our primary resistance for the May contract, below which 857 even is a support. It's actually a channel bottom against these two highs, and this low comes in at 857 even. That's in reach by the end of May, holding below 940.75. Not much to do here, though. I shouldn't spend too much time on beans because it's all very near and short term stuff. We covered wheat. Let's jump into the S&P. This is updated for Wednesday. I just haven't solidified it yet with the final chart. But we've got, we rallied here a bit today. We've got the 29.5 to 28.31 even area. 29.5 is this channel formation. We close the week back below not only the formation, but even we close below the preceding week's high settlement price. So this market remains subject to heavy trade. I'm not interested in going short it until we settle below this 27.64 even formation. So if we're looking at buying puts, I would do so with a settlement below 27.64 even. That's our next go with to the downside. Until then, if we close the week itself above 28.31 even, which is the daily chart equivalent to this 28.29.5. In fact, I think on Friday everything comes together at 28.29.5. So if we close the week above this formation, that's similar to that NASDAQ buy signal we're talking about, bullish continuation to 29.47 high within 2 to 3 weeks, and in fact the next several months expected to yield that 30.85 channel top. So 28.29.5, nice pivot point into later second quarter, and we could act on that if we settle Friday above 28.29.5. And in fact, let me take a look at the weekly chart there just to see where we closed last week. Wait, this is last week. The week before, 28.30. Okay, here we go. This is beautiful. 28.30 is the high weekly settlement price. This channel formation is 28.29.5 for the week. So if we close above 28.30 even, that is a nice go with to the upside for the S&P. So let's keep an eye on that. I say let's scout out some out of the money calls. Volatility has probably backed off just a little bit since the sell-off. Over the last few days. I would think at the very least the calls will be cheaper right now. Yeah, 28.35 was today's high. So closing above 29.5 or 28.5, whatever that was, and I'll obviously be talking about it in Friday's video. That would signal bullish continuation, and I think we should act on it if we can get a reasonable price. Maybe a call spread, a fat call spread, like a 1 point wide call spread or something. 28.29.5. So that's the S&P. Now I'm going to spend 10 minutes or so going through, take a look at the euro currency. Easing south after pushing to this long-term channel formation. This is our breakout here, 1590. Not much going on there. Let's take a look at the Canadian dollar. Okay, a little higher today. Tomorrow's resistance is 75.38 even. And so we'll keep an eye on that. If we do nothing, uh, we could at least wait for buying this with a settlement above, because I think that would be pretty reliable. Not only is it now a trend line, but it's also a channel top. And I know you've got some sort of and I'm not going to redraw it right now, but some sort of a speed line coming in like this, as you recall, closing above that channel top, nice buy signal. So 75.38 even. And we've got 75.15 as the low of the high. So this entire area is significant, can absorb buying through next week. It's also a significant upside pivot point into April, so we'll keep an eye on that. Let's talk Japanese yen, even though I don't have much interest. We got above this low of this high and back below it. Chop, chop. British pound. I know Theresa May had another failure, and the market is unaffected. It's almost as if the currency market is like no Brexit, perhaps. Is that what it's saying? No Brexit, 28.83 is our support still, and this is a slow grind up into the 38 handle over the coming month or so. Could be quicker if they clearly announce a no Brexit, or if they want to hold another referendum. Many of them do, and if it does, right now polls show that a no Brexit vote is a shoo-in. Take a look at gold. This channel formation is still here. Okay, so we've backed off. Tomorrow's resistance, 36.6. That's our secondary buy signal with a settlement above. Until then, you could say the market is vulnerable to slipping back to this channel support, which tomorrow's at 1305.5. And this is an area to buy into, and inversely to sell against following a settlement below. And I know you're real familiar with this right now. God damn it. All right, silver. Just going to get that out of there. 15.024, that's our base of support. Stable to bullish above through April and into May. 16 upper 16 in reach over the next month or two. Copper. Copper. I'm going to move this sucker. I thought I was. This is a weekly chart, so I got to go 4, and I'll just throw 3 in there, and that'll do it. Yeah. Well, we're farting around on this channel formation here. I could draw, other things here. This is a weekly chart, remember, so these are all pretty valid levels. This area is a 2.8589 to 2.8665 is this channel bottom. If we close back above it on Friday, it shrugged off what was a failed buy signal, and they're back into stability mode. I wouldn't, though, buy it until we pushed higher, maybe a new high settlement on a week above 2.9515. But until then, it's a mixed bag. I'd like to see this market close negative on the week, which last week was 2.8425, closing back below that on Friday, maintains what is a failed longer-term buy signal, which is essentially a valid sign of weakness into later spring. So that's copper. Platinum, I'm not even going to look at. What do the bonds do? What are the bonds doing? Looks like they pushed through again, but we're trading right below this 149.07 channel top. I'm going to be pushing if it's Friday. No, Friday. By the way, Friday. I'm on a kind of a road trip Friday. I just found out today. Long story, but I'm driving to Denver and back, which is about 8 hours on the road. I'm going to be leaving early in the morning. So I'll shoot the video the night before, of course, and we can talk on the phone for sure, but it could be one of those situations like a few weeks ago or a month ago where I kept cutting out, possibly. But in any event, I will be in touch with you, by noonish on Friday. I'll talk, and if we're trading above this 149.07 formation in the 30 year, I would like to find a way to buy some sort of a call to get long this market. Um, it could be a low volatility grind up. It could test our patience at times, but there is a case to be made for a 160 handle, low 160s within several months. And we could do another one of these, which was October to December, couple of months, right? Couple of months perhaps. So we wouldn't want to go any sooner than June. We may want to look at more of a September call, perhaps something that doesn't decay. We don't feel itchy to get out of it. Um, so there's that. And let's see how the 10-year is doing. And I'm sure it's above its level if the yeah. So this is a weekly. I know I've got a daily in here somewhere. Yeah, we actually closed higher on the day. So this thing is continuing to pull away from its buy signal. And so we've got loads of support in the lower half of the 123 handle, as I mentioned, and still expecting the 126 handle over the next, I don't know, 2 to 3 weeks, 3 to 5 weeks, somewhere like that. End of April, target 126 handle. I think that 30-year buy signal can be acted on. Take a look at the NASDAQ. Once again, we're both in the same page here, the 75.42 even formation. If we close above it on Friday, and it's possible, but it doesn't look at this point in time like it's likely. But if it did, it's the same as that S&P 500 channel top. But I think this one's a little more valid at this point in time because it actually held. So if we settle above it, off we go, in my opinion. Let's see what sugar did. Nothing. We're still in this no buy signal until we get above 13.20, and just nothing to do in this whole area. If the market begins to crap out, we could buy this 1106. That's about it, though. I do like being long calls with a weekly settlement above this formation, but I don't see that happening this week. Cocoa, same shit. You got this channel formation here. This is a weekly chart, by the way, so we could spend the next month and not test either one of these extreme points, which is fine by me. You don't want to be positioned in the middle of no man's land, right? And finally, coffee. Coffee looks like it's a little higher. And you got these little spy signal stair step approach on the way up. You know, at this point in time, as you can see, after all of this, we're at lows now that we haven't seen since 10 years ago. Um, so, yeah. Yeah, there's not much to do there in coffee. I think and coffee can be a really thin market too, if you've ever traded it. So I think that's about it. We're at 23 minutes. Yeah, I think that's about all we got to say. I guess I got a question about when those feeder cattle, that index number comes out. Is that a Friday release, a Monday release? Anyway, we'll talk tomorrow. Have a good evening.